Okay, let's get this started. Good morning, everyone, and welcome to today's Tuesday Market Outlook session. My name is Prakash Vijayanath. I am an analyst here at Options Play, and today I am going to be walking you through how we are viewing the current market. So pretty exciting stuff happening in the markets right now. And before we get started, just a quick disclaimer here. The types of securities forms and research tools used in this video are for demonstration purposes only and should not be considered a recommendation by Options Play or a solicitation or an offer to buy or sell any securities. This video is not intended to be used for any individual tax, legal, or investment planning advice. So our agenda for today will be starting off with the major indices. A lot of macroeconomic pressure driving the major indices lower, but some signs of a lift, at least for the short term. So we'll be getting into the key areas to look out for. From there, we'll be moving on to fixed income and commodities. We'll be taking a look at yields, bonds, and oil today. We are seeing a bit of a continuation of the trends that we've seen over the last few weeks. Yields continue to rise, bonds continue to fall. So again, we'll be highlighting some more key levels to be made aware of. And we'll be taking a look at the sector rotational model, where we are starting to see some early rebounds in defensive sectors and a majority of sectors that are still in the underperforming, in the lagging and the weakening categories here. We'll be taking a look at the one subsector of interest that I have for you today and a couple of bullish and bearish market observations. So starting off with the S&P 500. And we know that there's a lot of macro political tension here in the last week or so, and we have seen the S&P 500 be affected by that. We can see here price has moved lower here with fairly significant bearish momentum over the last 3 sessions. Right now, price is in what I would consider a little bit of a middle ground here between this 453 resistance level and this 428 support level. But it is looking like it is going to be opening up significantly higher this morning, thanks to some positive headlines that we are seeing. But if we take a look at the key levels itself, we saw that there was, interestingly enough, a double rejection of this 457, 458 level here after price made a strong move from 428. And we analyzed S&P 500 here, the technicals of the S&P 500 last week. We did see that there was this pullback initially after this rejection of this 457, 458 level. But it did look like, a pretty obvious pullback and a continuation and breakout to a new higher high, maybe around 470 as a potential target. But obviously with the macro politics essentially providing a bearish catalyst, we have seen a rejection by this 457 level and a strong move lower here, despite the positive bounce that we are getting this morning. In terms of areas to look at now, I'd be looking at 453, a revisit to 453 in the coming days, especially again due to this big gap up in the open. 453 to 457. Right now, we have seen now this area provide another area of resistance. So this area would be a key area definitely that I'll be looking at. But should we see price continue to move lower, 428 would be the obvious area to look at. So that being said, I do want to show you another chart that I thought was quite interesting, and that is the VIX. So the one thing I wanted to point out with the VIX is this is reversal type signal that I thought was quite interesting. And it comes down to the fact that we know when markets decline, the VIX almost always moves higher, right? We see this, it's been very obvious. That's just the inverse relationship that the VIX has with the S&P 500. But we have seen instances in the past where the VIX can be used as a confirmatory tool in conjunction with the S&P 500's price action. And what we essentially are looking for is a correlation between the S&P 500 and the VIX, even if it's only for one session. Normally we have inverse correlation. I'm looking for correlation, and we actually got that yesterday. We can see here the VIX made an initial spike up all the way to 32 and moved lower yesterday. Fairly bearish price action at that 30 area yesterday. This is today's candle, so just ignore that for now. But if we take a look at the price action of the S&P 500, it printed a bearish candle as well with the VIX. So the VIX printed a bearish candle. The S&P 500 printed a bearish candle. That for me tells me that this recent sell-off that we've had, it's losing momentum. Now, obviously, with price gapping up as high as it has in the open already. That's fairly obvious to see, and we are expecting a stronger bounce. But I just think it's an additional confirmatory tool that that provides us with a bit more optimism, at least in the short term, for a stronger rebound here in the S&P 500. So taking a look at the NASDAQ 100, pretty encouraging price action here as well. We did see an initial break below this 353 level on Friday, and price didn't really move much yesterday, but it is set to open at least back above that 353 level. That's quite encouraging for continuation higher here for NASDAQ 100, maybe back to this 370 area, which was a previous minus swing high, as we saw price to get rejected at that level in recent weeks. And we know that technology is starting to gain some momentum. So let's see what happens. I think it will be quite important for the NASDAQ 100 to stay up, or at least close above the 353 level for today's trading session. Taking a look at small caps, still quite bearish on them. And I do think that there is some evidence of price grinding its way higher back to this 210 level. And this 210 level is by far the most important level that we have here. We saw it act as this major support level for almost a year, for a bit longer than a year. Price did break below it, strong bearish momentum. And even the last three bullish weekly candles that we can see here didn't provide enough momentum to really break above the highs, or at least the open of the last bearish candle. And, you don't even have to look at the CCI to recognize that is very weak momentum. And I do think that this opens the door for a continuation lower. That being said, we do have price opening higher this morning. And again, like I mentioned earlier, 210 is going to be the key level. So it does look like we are grinding higher to this 210 level. But we saw price reject 209 last week. We may see that again. I'll be looking for a bearish price action at that 210 level if we see a grind higher for confirmation for continuation lower, maybe back to this 190, 188 area of support. That being said, if we see a break above 210, that would change our outlook from bearish to a bit more of a neutral outlook. And especially with price being back within this range between 234 and 210, that is a very neutral range. So again, a break above that 210 level would definitely shift our outlook to a more neutral to more positive outlook. Taking a look at yields, continuation of trend, really. That's all we've seen. We see here yields continue to just push higher above 190 basis points. Came back to retest that, and again, over the last two sessions, this morning included, is continuing higher here. You can see that on the weekly time frame, even breaking above what was a previous resistance area at around 200 basis points. There's a lot of momentum here in yields. I still think this move has happened very quickly. But again, expect more strength in financials should this continue. And again, if we see this move with this much momentum, I do think it does provide a bit of resistance against the overall the major indices, especially the growth names here. So something to keep a look at. And that leads us to bonds. As you can see with TLT, TLT has now reached that level that we have been talking about for the last few weeks at around 135, 136 or so. We saw a lot of consolidation at this 141 support area, and price eventually broke below that strong bearish momentum and is now at this major support level. I will say now it's a bit of a wait and see game as to what happens, and this does provide some evidence that we may see a bit of a pullback here in yields, especially with TLT reaching that support level. We may see a pullback in yields and a bit more of consolidation between 200 and 190 basis points or so. But again, definitely a bit more of a wait and see game. A break below this 136 level here for TLT does open the door to around this 130, 132 area also, which is a minor area of support. Taking a look at crude, I like to focus on the weekly time frame for this, and I know I pointed this out last week, but we have seen a classical uptrend, right? We've seen higher highs, higher lows, and now if we take a look at the last few weeks, there's been a lot of bullish candles, and I do think it is now time for a bit more of a pullback. It's hard to justify long positions right now with crude, and especially, more importantly, with energy stocks that are highly susceptible to crude prices. I do think, with crude being this overbought and this overextended, I do think it's time to look out for that pullback. And I'd like to see that on a weekly time frame, maybe all the way back to this 84 level, which coincides with the daily time frames, with the daily time frames previous swing high, and a clear area of resistance here. So again, wait for this pullback here on crude. I do think price is overextended, and just watch the energy names here. It may not be the right time to enter them. Definitely still bullish, but from a technical perspective, it is looking quite dangerous with at these overextended levels. So taking a look at sector rotation, we now have 3 sectors in the improving and leading category, 8 in the lagging and weakening. Not great, but in my opinion, there's still a lot of ambiguity here. Yes, from a broad perspective, it's never great to have the vast majority of sectors in the lagging and weakening categories, but we are starting to see a shift in momentum in many sectors within these categories. And I mean, we see here materials, real estate, industrials, yes, part of the lagging category, but starting to see those upward moves. Sorry, not real estate, but materials. Starting to see those upward moves here in terms of momentum. Financials as well, starting to see a slight upward move. Utilities and staples, again, an upward move in these defensive names. But, overall, it doesn't really mean that we're bullish on them, but it does indicate that relative to the broader market, there is some short-term outperformance. We look at technology, there has been a loss in momentum, and that's been reflected within the major indices in terms of price action over the last few days. Like, technology was set to rotate into the leading category, sudden loss of momentum and heading lower here in terms of relative momentum. But again, I just want to reemphasize right now, I just feel that there is too much ambiguity, and to really have this clear picture as to what the short-term sector rotation is telling us, I do think we need to sit on our hands and see how this develops. But that being said, I do want to go over technology sector and highlight some of the key levels. I do expect the tech sector XLK to open quite higher, maybe back to this 160, 165 area of resistance or so. So this will be a key area that I expect technology to open at or nearby. And I think this the price action at this area will tell us, will give us some more clues as to what happens next. Should we see some bearish price action between this 150 or 160, 164 area? I do expect a continuation lower with the next major area of support at 147, but a break above 164, and we should act as support in the past. That would signify a continuation higher, maybe back to at least 172 or so. So definitely something to keep an eye on over the next few days as a technology sector. But should the technology sector reverse lower, expect more volatility and expect the major indices that are heavily weighted towards the technology sector to follow suit. And taking a look at the material sector, also somewhat in the no man's land right now, right? We have this initial breakout above this 89 area of resistance, and price did try and stay above it, but just didn't find the momentum, just didn't find that strength, moved lower with strong bearish momentum all the way to around 81, and has since started to consolidate. We did see a bit of a rebound to what I would consider a minor resistance level between 86 and 87, but a strong rejection in recent days and a strong move lower here for materials. So in terms of possible targets, the bearish target that I'd have here would be 79 or so, should we see price continue to decline. But again, we are expecting a move higher here for at the open for majority of sectors at least. And the next key area that I'll be looking at would be this 86.50 near 87 area of minor resistance. A break above that level would indicate a move back to this 89 area is on the cards. But if you take a look at the weekly, we are seeing this almost range bound movement. Price reacted at the upper bound of that range, move lower, muted I would call muted momentum of the last 3 bullish candles, and I do think this does signify the move lower here for materials overall. So again, a bit of ambiguity, but I think today's price action will really tell us what's happening and where price will head next. What's important, what's important to keep note is where are those key levels. Okay, so taking a look at our first subsector that I have for you today, we have the Invesco Solar ETF, and this ETF is made up of a lot of the higher beta, higher valuation growth names, and yes, very exciting names. I like them a lot, but it's just not the right environment for these names. We are in the middle of this rotation out of growth and into value, and that's definitely going to be a medium-term theme this year. And as you can see, that is now being reflected in the bearish trend that we have seen over the last few months. If we take a look at, let's start with the daily time frame. Actually, we saw price form this resistance level near 100, almost form a bit of a double top, and immediately moved lower, broke below 93 support, strong bearish momentum all the way to 67, 68, this area of support, and broke below that. And now price is now essentially grinding a little bit higher, but again, complete lack of momentum, reacting negatively to the 67, 86 level. Strong bearish momentum already in the last 3 days. And I do think it does indicate a further move lower. But if we take a look at the weekly time frame, I think it's a much cleaner picture of what's happening from a technical perspective. We have this break above 67, 68 in September 2020 in September, and price has just managed to stay above this level. A strong area of support, a very obvious area of support at around 60, let's call it 68. But on the weekly time frame, we can see price broke below that and has now come back to retest it. Perfectly rejected it. It's one of my favorite bearish type of setups in terms of looking at the patterns. Is a break below an obvious area of support, come back to retest, pull back to retest that level, and a very obvious rejection here on the weekly time frame, and already some bearish price action here this week. So I do think this provides the evidence that we need to confirm a further continuation lower. And from a risk to reward perspective, I think it's a great time to look at getting into a bearish position within this sector that is just very exciting, yes, but it's just made up of too many high valued names, which are growth names, and it's just not the right environment. So I do think there's more downside expected. I'd be looking around this 49.50 area of support as a possible longer term target over the next few weeks, even months. So taking a look at some bullish market observations. First one I have for you is GM. And, GM has been quite choppy recently. We have seen, an initial reversal that we thought at around 50, a move higher, immediately rejected its 21-day exponential moving average, continued lower, but is now finding support at this area of major support that I would call it around 48. We saw price found support there in the past, and again, it's set to, despite touching that level yesterday, it's set to open higher. And from a risk to reward perspective, it's quite attractive for bullish opportunity. Even more so when you look at the weekly time frame. You can see here price. This is clearly a key level at 48, where price did find support in the past, and it did act as resistance as well. Before around in 2020, late 2020, we can see here, weekly time frame. Yes, price has been a bit more range bound with clear resistance at 64, clear support at 48. Now that price is back at this 48 level and set to open higher today already, I think, from a technical perspective, that's an excellent risk to reward, especially if you consider the fact that once price breaks below this 48 level, that could be that signals to immediately get out of the trade for a very limited loss here. In terms of potential short-term targets, I'd really be looking at this 54 level that did provide support, a minor area of support in the past, and it did provide resistance here more recently. Taking a look at Coca-Cola. So Coca-Cola, part of the staples sector, definitely one of the more safer value names out there. And we can see here strong outperformance relative to the overall market. Yes, quite choppy, but still finding support and grinding higher, continuing to make those higher lows that we like to see. And we are seeing, a strong upward trend. Price essentially reversed at the 62 level, but found support at the 55-day exponential moving average. Short-term momentum is now negative, but near an oversold level. and we are seeing bullish price action there. I think it's a good, overall a good entry point here for Coca-Cola for continuation higher, especially with this. Again, it's a value name, and we are seeing strong rotation into value here. So this pullback is providing a good opportunity, in my opinion, for continuation higher. Taking a look at CSCO. CSCO, this is an earnings play. Earnings are tomorrow. That being said, the reason I wanted to point it out was because price is now at the support level at 53. That being said, it is set to open a bit higher this morning. But from a risk to reward perspective, as an earnings play, I do think it provides a good risk to reward. I think there's a good, the fact that price has now pulled back to an area of support, I think does provide a good bullish opportunity as an earnings play, because you don't want to gamble on earnings when price is at all-time high, because there's only so much more or so much further extended that price would move. But the fact is, at a support level, we know there's going to be a big move, especially after the last 3 candles have been bearish candles. If you're looking for a better risk to reward earnings type of entry, I think CSCO does provide that. Possible areas of resistance in the short term would be this 56 area. But again, this is earnings. Anything can happen. We may even see that provide a catalyst for it to break and open above this area or significantly lower. So want to keep in mind and just remember, this is an earnings play. A lot of volatility expected. And moving on to some bearish observations. Dexcom. Dexcom, it is part of the healthcare sector, but I do view Dexcom as maybe a bit more of a technology name. One, very high beta, price to earnings at around 81, I believe. And obviously, when you see price to earnings at high, you immediately have to think danger, because high valuations are not being rewarded here in this current environment. That being said, I really like Dexcom from a long-term perspective. They provide a glucose monitoring system. And I for diabetes, and I do think it's a very exciting name. It's a very exciting product, definitely long-term potential. But in the short to medium term, there's just the price action really tells it all, right? We saw if we could look at daily time frame, we saw this topping formation, pretty much what I would call a head and shoulders. We can see the right shoulder there, and we saw the neckline at around 525. Price to break below that and is now and had continued to move lower with strong bearish momentum. More recently, we have seen price pop up to its 21-day exponential moving average, bearish price action there, and we've already seen that continuation lower here. In terms of the weekly time frame, I think it provides again a cleaner picture of what's happening. We saw this break below the 438 support level, on a very obvious retest and fail, and continuation lower. And in terms of targets, short term, I'll be looking at this 380 level over the next couple of days. But in the long term, I do think this 311 area of major support would be that bearish targets over the next few weeks or even months. Taking a look at Snap. This was a name that I actually had last week, where Snap was trading just below current levels. I wanted to bring it up again because if we take a look at the last 3 candles, there's 3 very obvious rejections of the 55-day exponential moving average, and it's at that $40 resistance level. So, our previous support level turning resistance. So, from a risk to reward perspective for a bearish move here on Snap, I think it's at a very good area. I think it's an excellent entry point here for a continuation lower here for Snap, with 28 being the next target. That being said, if this moves against us, it's a very obvious time. The risk to reward provides an ideal exit opportunity at around this 44 area here. Should price break up above that level, or even break above the 55-day exponential moving average, that would invalidate our analysis, and we would suggest cutting losses early on this trade. And those losses would be minimal. But again, from a risk to reward technical perspective, I do think there's a further downside, and where price is currently at provides an excellent entry point for this trade. So with that is all I have for you today. Thank you so much for joining me, and I hope you have a great trading day and trading week ahead. Goodbye.